The feds cut the rate. What does that mean to mortgage rates? Stick around and watch. This is Kasama Lee, your community realtor. So as of September 18, the feds cut the rates again. Is that good? That is awesome for so many different reasons, not just on the mortgage rates. However, I want you to stick around so you understand more about whether there's a direct correlation between the Fed's rate cut to the mortgage rate, okay? Before we do that, if you find this type of content valuable, you want to hit subscribe and the bell notification so you don't miss future videos. And I want to thank you for your support, for sharing the content, for liking and commenting, as this helps grow our channel so that we could get the information in front of more people. All right. So the announcement came out that as of September 18, 2024, the Fed cut the rates by half a point, 0.5%. That is huge, okay? It's actually the biggest cut that they have done in a long time. And two of the reasons that they decided to vote on this, even though it was not unanimously voted in agreement, but the majority votes basically got the 0.5% cut to happen, okay? The most important thing you want to know is that the inflation rate is moving in the right direction. It's been decreasing closer and closer to the targeted 2%, which is what the Feds would like to see, okay? The other thing is, although with the inflation rates being, moving in the right direction, the unemployment rate has gone up. And you may have heard that, the tech industry has done major layoffs. There are areas where AIs have actually replaced people, unfortunately. But that also is showing up and is a reflection on the higher unemployment rate. So that's why there were mixed feelings with the Fed on, whether to drop the rate by 0.5% or less. But anyway, it got voted in. If you recall, rates dropped even below 3% during the pandemic in 2020. Unheard of, right? So the pandemic really affected the interest rates. And it went up from 2020 to as high as 8% last year, 2023. Not that far from 2020, and that's the roller coaster we've been having. Right now, mortgage rates are at around 6.2%. Now, all of this is sounding great, okay? And if you are sort of back in the market, looking at homes again, you may want to get with your favorite trusted lender and have your pre-approval rerun if it has been more than 90 days, because the rates are looking much better now, and it should look better for your monthly principal, interest, tax, and insurance, also known as PITI. You might want to have it rerun because the numbers should look quite different than whatever you had run at least 90 days ago. Let's talk about if there's a direct correlation between the Fed's rate and the mortgage rate. Now, you would think that there's a direct correlation, which means, woohoo, the Fed's cut the rate by 0.5%. Does that mean mortgage rates drop by 0.5%? Well, what do you think? I'll let you guess. It's either a yes or a no, right? The answer is no, okay? Because the mortgage rates, even though it's influenced by the Fed's activity, whether they increase or decrease the rate, it has more to do with the current market condition. And because the employment is still high, among a few other factors, we are not seeing a drop of a 0.5% in mortgage rates. However, it's moving in the right direction. So, let's embrace the good news, right, of the update of that. But there's still quite a ways to go. According to experts, the interest rates is anticipated to drop to around 5.5% by 2025, by the end of 2025. So at least another year out. We're not where we would love to see, but you know what? It's moving. The trend is moving downwards and it's moving in the right direction. So let's just celebrate that. If you have any other questions about mortgage rates, or if you need a recommendation for a reputable mortgage specialist, feel free to just reach out to me at kasamasales.com, or any questions, feel free to comment as well. I hope this information is helpful to you, because it should be helping whether you are a seller, because that means there should be more buyers back in the pool, right? As we are progressing here. And that's a benefit to you if you're a seller. And if you are a buyer, let's get you started. Let's see where you can be in terms of affordability. It's also important to know that we have been seeing sort of a stagnant in the marketplace of listings on the market. They tend to sit a little bit longer, and there are just less buyers still looking. The actual foot traffic of people coming through properties is still a lot less than, let's say, I want to say 6 months ago, before summer break. So keep that in mind as well, but that this should be helping. This update should be helping. So thanks for watching, and feel free to reach out.